All right, this is an update on Bitcoin dollar. It is Thursday, July 19th, 2018. It's about 4 minutes, almost 4 minutes after 7 p.m. Eastern time. So we're looking at the 1 hour time frame, and then I'm going to review the same things that we've been looking at since we started this breakout. So since we had this first initial solid continuation breakout trade, this was July, I get the exact date, I think that was the 16th. I've got everything so compressed in here. So this was July 16th, and then we had the other breakout here. This was July 17th, and now we're sitting here at July 19th in the evening, Eastern time. We're looking at price more or less moving around in this sideways consolidation range. And what I said this morning still holds. I'm not really too interested in jumping in and trying to predict either direction. I mean, if it's going to break out and continue to go higher, I'm going to be looking at the larger time frames, number one. Number two, if it's going to sell off, and this is something that I do very often because I'm not interested in trying to pick highs, tops and bottoms. You try to do that over the course of your career and you'll find yourself losing a lot of money in the process. So many of you know that I'm a big fan of John Bollinger, and John Bollinger used to tell the story. I attended his weekend seminar in Los Angeles years ago, and I'm a big fan of John Bollinger, but he has a story where he talks about how the trading gods will allow you to pick and sell the top once and buy the bottom, the exact bottom once, and the exact top, right? You'll be able to do that, and they'll let you do that once, but you're more than welcome to do the opposite. You're more than welcome to mess it all up and do that as often as you possibly can or want to, or as much money as you've got available to try something like that. So trying to pick tops and bottoms is a really risky game. Now, a lot of people will argue, if you can get in at the very, very bottom, you can make a hell of a lot of money. Yes, it's true, but you can also wait for confirmation. Confirmation that it is a true bottom, that it is really breaking out and trending on the way up. So you'll notice, and this is exactly what played out because I talked about this over the last couple of weeks. Everybody was really sort of thinking, is it really hitting the bottom? Is it really hitting the low? When it dipped down here a few weeks ago, down there to just about the 6,000 and then below, it got into the fives. People are saying, is this it? Is this finally it? Is this finally over? So we'll look at the daily time frames in just a moment. And back to what I say every time we experience something like this, if we get a breakout and we get a move, we're going to get more opportunities to trade it. And if it's the true trending move all the way back up, you're going to get, and we're going to be looking at trading and getting and earning the meat, the big section of that trending move with confirmation. That's, I'm all about confirmation. I'm not interested in throwing my money away and trying to pick tops and bottoms. We're going to get an opportunity. So if this is a top and price is going to drop all the way back down here to, let's say, the 6,000 level, we're going to get another opportunity to sell it again, right? It would look something like this. I'll go ahead and open this up. It would look something like what we saw here, this peak and that pullback. And then I'm looking for that price swing, right? That new A high, B low, C to the extension, and then trade it back down again when a candle closes below that new B low. So far, this just looks like a retracement. Now, that will happen sometimes. Sometimes it'll change the structure of the price action that I see relative to the time frame that I'm trading. That price structure will change, and I just have to go with it. I've got no choice. Nobody can force it. So now I've got a clear high and low and a new consolidation range. And I'm waiting for and looking for a possible continuation breakout trade or that T2 pattern, which would then lead to another spike and a blow off move to the upside, and then it'll pull back down. Either way, I'm going to wait for confirmation. I'm not going to sell it just because price spikes through. That's what a lot of people or inexperienced people are going to try and do. If it's worked for them a couple of times, try and do that for 18 years, right? Right. Try and do that consistently and build a business and build your trading account and have, your bills paid and live a lifestyle off of that, right? It's going to be really hard for you to do that. You're going to lose a lot of money in the process. So again, we're going to get confirmation if price turns around and comes back down. And then if it breaks out to the upside and continues on, we're still going to get confirmation. But right now, it's time to be very careful. So we traded this breakout. You can see this arrow down here. That was the continuation breakout trade. We traded it back up here to the 6,600 level, and then we traded another breakout, but we scaled out of the position. So we were still in half of the trade, and this confirmed the move higher to this pocket or this range of resistance right here at approximately 73.80 area. Again, I'll review for those of you who missed that 73 area, that 73.80 area, that resistance or pocket or range of resistance. Remember, very often resistance and support is not always going to be a precise or exact number. Sometimes it's going to be a pocket or a range of support and resistance. So let's tighten up the charts, and I'll walk you through exactly what we were trading off of. So again, this brings us back to the end of, or the last part of June. We had this move back up, and I'm sort of grouping everything together here on the 1 hour chart. But this work was done here on the 4 hour and the daily chart. But you can see here, I'm just going to stick with the 1 hour chart because this is where the breakouts are and where we're getting our entries. But that was the extension target right back up there at approximately the 73.80 area. This is going to, at least, even if it's just temporarily, going to provide that area of consolidation where there's going to be some profit taking. There's going to be some people picking tops and trying to sell it. It's going to go sideways for a little while. This was a big move. A lot of people were counting on it. You know, it bounced off of and it didn't clear the 786, but right around and between that 786 and the 618 and the 786 retracement level, and this is our extension target. Now we have further targets. We've got all the way back up here, and again, it's a lot easier to see it on the larger time frame, but right now I'm just going to stick with the 1 hour chart. The 8,080 area, and then of course we've got another level back up here at the 8420. So these are psychological levels as well. Let me put everything back into place, and then we'll go to the larger time frames, and then I'll show you exactly how all of this comes together with the larger time frames. So this is the 4 hour chart. Now you might remember over the last few weeks that when I continue to show the 4 hour chart, this is for the most part the way I leave it. I have not expanded or clicked to zoom in on the candles. I don't care what these candle patterns are doing, at least on this time frame, at least the way it was prior to that last dip low in the 5,000s, and then when it broke out and started to move right back up. But you can see this spike low where it finally settled back in February, and it printed this trend line. And right now, where price is bouncing around over the past couple of days is the bottom side of this uptrend line. So there are multiple forms of resistance and support for confirmation. And that's what's going to help create that range or pocket of resistance in this case, because we're trading it back up. Now, I am not saying that price is going to stay here and it's not going any higher. I am not saying that. What I'm saying is this is the level to be careful. This is the area to be careful. This is the place to start locking in profits and being very, very careful. But remember, price can easily blow out that high from the other day and then continue and tear right back up higher. We know how these currencies move. We know how these, how the market reacts to it. We know how it can potentially just, move quickly in an hour. I mean, we'll go back here to the 1 hour chart. You traded this. You saw this in the last couple of days. These are big moves. Anybody that's trying to short these positions off of these resistance areas, they're going to get stuck. Sometimes it's hard to get out of these trades when it's going the opposite direction of where you want it to go, and you don't always get out where you want to get out. So these moves can be quick. So again, with the continuation breakout trade, for those of you who are new, who are watching these techniques and these videos, the continuation breakout trade is actually a strategy that I put together. So I've been trading since 2001, and one of the biggest challenges, whether I was trading futures, currencies, and now cryptocurrencies, one of the biggest challenges that I experienced back in 2001 was on these breakouts or head fakes. So I joined a chat room in 2001, and you'll notice, and I'll just give you a little bit of history, make it real quick. This high right here, this is the 1 hour chart, by the way. This high, this range right here, I joined a chat room, and the chat room moderators, they would call a trade to go long when price was taking out the highs, or they would call to sell when price was just taking out the lows. I mean, that's pretty much for the most part what they were doing. Really wasn't a strategy. They didn't have, they didn't solidify their methodologies behind these breakouts to eliminate the possibility of these head fakes. And in almost every situation, when these chat room moderators would call a buy when price was taking out the highs, it would turn into a head fake, and we would end up losing money. Everybody in the chat room, including me, we would all lose money. And it really upset me because it didn't seem like there was any structure behind their trades. Now, sometimes, obviously, and this is a perfect example of this one, when price is taking out the highs, it might be a good idea to try to get into the trade and buy when it's taking out the highs, but it doesn't always work that way. If you've traded for a little while, you know about head fakes. You know that that can happen. You try to sell when price is taking out lows and it can turn around and go against you, or you can buy when it's taking out the highs and it can drop and the exact opposite. So you see where I'm going with that. So um, my first goal when I went off on my own to create my own trading system, because I had lost so much money in this chat room. I mean, it was disgusting. And there was one particular night I had a meltdown. So I was trading Forex in this chat room and I just lost it. Like I couldn't stand it. I was losing thousands and thousands of dollars on my trades. And I had to do something, right? My family's counting on me to make money. I had sold a business and I needed to figure this out. So I canceled my subscription to the chat room and decided I was committed to trying to figure out how to become not just a professional trader, but to understand how the markets work and how people and the psychology behind that, the way price moves, how people react to certain things, right? How people react and trade to support resistance, what causes head fakes, how to prevent head fakes. And that led me to develop and create my first technique, my first strategy, which was the continuation breakout trade. And it is the most profitable trading technique that I have. It just makes me a massive amount of money. On the website, you can see there was a day in 2005 in April. I had placed 4 trades in the Forex market with that continuation breakout trade, and I earned just over $40,000 that morning. And that was real live money. That was my money in my real account. Obviously, I made more money before that, and I certainly make a lot more money since then. But that was a real critical moment and a very important day where I reflected back on the 4 trades that I executed, the technique that I was using, and my ability to actually repeat this behavior for the rest of my life. Like nobody was ever going to be able to take that away from me. I had become a true professional trader. It was part of me. It was part of who I am. And then I also, of course, made that decision. If you've heard the story, I made that decision that day to coach a personal friend. And then that led me on to where I am today, coaching traders, Forex traders, and cryptocurrency traders. So with these strategies, so this was the continuation breakout trade that's put us in this path. Again, over the last few weeks, I keep saying, don't worry about it. Stop buying, first of all, on these dips. It's just prior to where we got this clear, clean breakout, you're just grinding away at your trading account. You didn't know for sure. Now we've got confirmation. Well, we were able to trade it again right up into this pocket or range of resistance, but I just showed you what that was technically, at least technically. This is a pause. This is a potential area where we can sort of reset, take some profits, and then get ready for another move higher if that's what we get. And we're certainly going to get confirmation, and I'll be calling that trade. Or we're going to know that it's probably going to drop right back down here, and we're going to get an opportunity to sell it. So be careful about picking tops. Be careful about picking bottoms. Like the trading gods say, you're more than welcome to do that once. You're going to be able to do that once. They'll give you that gift to pick an exact top and pick an exact bottom and trade that once, but you're more than welcome to try it a whole bunch of times and grind away at your trading account. It's very, very hard. I wait for confirmation. You're going to get plenty of opportunities to trade the meat of the trend and to earn the bigger portion right in the middle, that heart of the move. That's what we're always looking for. At that point, we have confirmation. There's a lot more volume. There's more participation in that direction. We don't have to, there's very little resistance, right? It's like trying to pick a top and then not everybody else sees that, right? Everybody's still trying to go the opposite direction, and it's likely that you're going to get stopped out using a small stop in a situation like that, and you don't want to do that here. So We'll talk about this, I think, on Friday. Things might continue to go a little bit sideways. We might see a spike up or down in one direction or another. And again, if we get another breakout, I'm certainly going to trade it. But if you look back at the videos from 2016 and 2017, last summer, you can see how we traded these breakouts. I'll go ahead and go to the daily chart. I'm going to have to detach this. And you can see how we traded the continuation breakout trade all through August, September, October. I mean, the videos are on the website, and you can see, again, it really came down to that continuation breakout trade. I did use the Tech 1 trade a few times. The Tech 1 trade is trading off of either support or resistance. I use it in a couple of different ways. So let's go back over here, and I'll show you quickly. The Tech 1 trade is something that you might want to consider learning how to use. Inside of a range of consolidation, I can trade a Tech 1 trade off of either resistance or support as long as it's significant. Significant meaning relative to the time frame that I'm trading. It has to be solidified. There's got to be some time behind it, right? It's got to be some time in place. So this has been sitting here for quite a while. You can trade a Tech 1 trade off of support or resistance as long as it's a significant support or resistance, or you trade the Tech 1 as a bounce off of a support or resistance level after a breakout. Go back over here and see if I can find that level. This is one of them. So I'm going to detach this, and we're going to go over here to the 1 hour because it stands out the easiest. So here you have a level of resistance right here and consolidation. And then we had the continuation breakout trade. This is the daily time frame. This is last summer. And we traded this. I have videos that show us live trading this and then updating as we continue to trade this thing all the way back up. But anyway, it pulled back eventually and hit that. It retraced to the old resistance level, which then became new support at that point because we're in a new uptrend. But that is the pullback to the resistance level that it broke out. In this case, it would be the exact opposite if we were trading it to the downside. And then it formed that Tech 1 trade, which gave us a second entry opportunity. So if I was to show you this chart and say that this was just a 1 hour time frame, and you miss this opportunity to trade this breakout, you could wait for the pullback. That's a second entry opportunity. That's the Tech 1 trade, and you would have taken the rest of the trade. It just would have continued. That trend just would have continued. And of course, you can use the Fibonacci tools and all of this technical information to gather confirmation, to gather all of your thoughts and make sure that you're trading in the right way. You're looking for these trend lines. You're identifying key support and resistance levels and Fibonacci retracement levels, things like that, and using extension targets for some of these take profit levels. So I'll go ahead and put everything back in place here on the daily time frame. So again, remember that 4 hour resistance area right here. It could be just temporary, but I trade cautiously when we get into these ranges like this. You got to be careful. I don't want to give anything back. And we're here to make money, so we're going to be looking for another opportunity to either trade this higher again, or if it drops and we're going to, look for the opportunity to sell it, I'll definitely be there and we'll be calling this trade.